Welcome back. Let's get you a quick update on what's happening in the world of commodities. Manisha Gupta is joining in. Manisha, what's the one commodity you're tracking today?
I'm looking at the precious metal prices because we have seen 3 weeks of decline for this one, and this week as well has started on a weaker note here. Well, it has to do with the fact that the US dollar has continued to strengthen, and that's weighing on to many of these metal prices right now. When you look at the month of January or 2023 for that matter, the gold posted its best start to January in a decade, and we saw 6% of gains come in for the month of Jan there. And when you look at the global central bank in the previous year, that was at a record at 1136 tons as well, and nearly 800 tons of that buying came in the second half of this year. But take a look at the prices on what we've done in last 3 or 4 weeks and last 1 month to be precise. We have seen the gold prices decline by 3.5%. Silver is down more than 10% now, and you have copper prices as well declining 3%. Last 2 to 3 weeks, almost all metals, whether it has been precious metals or base metals, have seen a decline, and the major binding thread between all of that clearly has been the dollar index, which is seen inching towards 104 right now. For the precious metals, it also is various other things. One, there is hawkish signals now coming in from the US Fed and expectation that you could be looking at further rate hikes as well coming in. Second is the Russia sales in sense of gold, where we do understand via various reports, and this one is coming in from World Gold Council, which say that 3.6 tons of gold has been sold to fund its debt. So there's that amount of gold coming into the markets as well. And the Chinese longs also have seen some unwinding. The last $80 of a jump up that you saw in case of gold prices, much of that speculative buying was coming in from China, and there is some profit taking there. Higher import duty also continues to weigh. We have seen that come in for silver. So with 15 to 18% of an import duty for gold, that seems to be weighing in. And then Indian imports have continued to slip in the month of December, and January and Feb as well has seen slow uptick. The investment demand, the jewelry demand also has been on the weaker side. The jeweler industry tells us that in the month of Jan and Feb, they have seen 50 to 70% of a decline in regular jewelry buying, and that continues to weigh in as well. Investment demand also is weak. The global ETF report continues, reports outflows for the 9th straight month. So the investment demand in that sense also has continued to decline. All of that continues to weigh in case of gold. The chartists tell us that 1850, if that breaks on the lower side for the gold prices, we are headed for 1830 then.